He's come in there. I'll start at 1 minute past. That'll give everybody a chance to get in. It's 1 minute past, so we will commence. So thank you for everybody coming along today. And before we begin, Farmers for Climate Action acknowledges the traditional owners of the land on which we work and the traditional owners of the land of our guests and speakers. Today, we pay respects to elders past and present, and I'm coming to you from Wiradjuri country, which is southern New South Wales sort of thing. In this webinar, we use webinar mode, so we won't be able to hear or see you. Please put comments in the chat and questions. This is important. Put the questions you want to ask in the Q&A section. I welcome the attendees at this webinar this morning. Farmers for Climate Action, as the name suggests, is an organisation that is primarily focused on taking climate action. This means achieving economy-wide reductions in actual emissions. To do this, we advocate on behalf of our 8,300 members. We also provide climate-smart farming resources to those members to help them adapt to worsening climate change. To those interested, you can find these resources on the website under Get Informed and the subsection Climate Smart Farming Toolkit. So without further delay, I would like to introduce Eamon Sloan. Now, Eamon joined the Insurance Council of Australia in March 2023, bringing experience working at the intersection of industry and government. As well as leading the Insurance Council's work on farm insurance, he also works across issues including Australia's national protection gap, cybersecurity, and artificial intelligence competition. His work covers specific insurance lines, including cyber and travel insurance. Prior to joining the Insurance Council, Eamon worked in various economic and foreign policy roles across the Australian Public Service. So over to you, Eamon.
Thank you very much, Peter, for that warm introduction. I'll just get my presentation going. In a second. Hoping everyone can see that.
Green's up. Yep.
Excellent. All right. Well, I also just want to acknowledge the traditional owners of the land. So for me, I'm in Canberra. That's the Ngunnawal people. Oh, there we go. Sorry. So as Peter mentioned, I'm Eamon, an advisor of the Insurance Council of Australia's Regulatory and Consumer Policy team, and I lead the Insurance Council's work on farm insurance and rural and regional issues more broadly. My work focuses on getting the right policy settings around Australia's insurance system so insurers can develop and deliver appropriate products for insurance customers of all stripes, including farmers and those in regional Australia. As you will probably all be aware, today I'm going to focus on an issue that's been receiving some pretty significant media attention over the last year or so. And as I understand from my conversations with Paul at Farmers for Climate Action, it's one that I'm sure a couple of people on this call are interested in, and that's the concerns around insurance costs for landowners neighbouring large-scale solar farms, particularly around the risk of accidental fire spreading and causing damage to the solar farm and where liability lies. So today I want to take a pretty high-level look at the issue and then flesh out some solutions and try and be helpful around that. And this issue is kind of discrete from other issues that I know people are concerned around, and that's hosting renewable energy infrastructure and hosting transmission lines. I want to focus on the neighbouring solar farms, but maybe if there's people who have questions, we can get to those as we go through. The other thing I just want to flag is that neither myself nor the Insurance Council are licensed to give financial advice. So when I'm providing answers to questions, I just have to be really careful around what I do and don't say for fear of my general counsel grasping me over the knuckles later. So I'm going to start with a really quick high-level look at the insurance industry's approach to climate change generally, and then focus a little bit on agriculture, and then I'll jump to the idea around solar farms. So insurers price risk, and to do this, they need to understand risk. So in Australia, everyone on this call will be aware, climate change presents an enormous risk to our communities and industries. Insurers understand this, and as an industry, we're really big advocates for a transition to net zero and greater government investment in resilience and mitigation measures to reduce risk. As an industry and individually, insurers are engaged in initiatives to share data, insights, and expertise with government and contribute to the scientific discussion around the climate to help inform climate policy. This advocacy is supported by the Insurance Council's own climate change roadmap, which we released in November 2022. The roadmap lays out how we as an industry can achieve net zero by 2050 across operations, including underwriting and investment portfolios, and make substantial emission reductions this decade. Given the increasing frequency and severity of extreme weather events, the insurance industry continues to innovate and advocate to help farming communities better manage their risk, build resilience, and prepare for the impacts of a changing climate. For example, I know WFI have been piloting a haystack temperature monitoring program with customers. The program inserts probes into haystacks, monitors temperatures, obviously, and farmers are alerted when temperatures increase to a point that a combustion fire starting is possible. So that's just one example. I'm also aware that insurers are continually monitoring how farmers are responding to our changing climate in their own processes, including through shifts towards more sustainable farming, and insurers want to ensure that their products are fit for purpose going forward. So that's a big focus of my members. Now I'm going to jump straight into the topic I mentioned before, the expansion of solar farms across regional Australia and the issues that arise around it, particularly around insurance. So as you all will know, solar farms, wind farms, pump hydro, new transmission lines are all critical components to our energy transition. However, the development and running of these infrastructure projects brings a range of challenges that need to be navigated by communities, business and government. At the ICA, we're aware of concerns raised by landholders about the impact that these projects may have on their public liability insurance. I've personally had conversations with farmers and their representatives, including Paul at Farmers for Climate Action's NFF, around where financial liability falls if a farm was to cause accidental damage to a neighbouring solar farm. So I'm also in regular contact with our members who offer insurance for farm and rural properties, and we're working proactively with those members to understand and address these concerns. And then just to speak pretty high level about insurance policies, as I'm sure most of you will be aware, most insurance policies for farms and large rural properties are put together by brokers who work closely with the insurers to put together coverage that suits the property owner's specific business type and needs. This means that insurers are able to provide insurance for farms or rural properties based on an assessment of the individual circumstances of a specific landholder. And so if circumstances change, then the risk profile changes. This is where this risk crops up, and it's where a lot of the concern is coming from. So I'm just going to jump into some solutions now that we have been talking through with our members and other interested parties. These are called neighbouring agreements. I'm sure some on the call will have heard of them. They're basically negotiated commercial agreements between landholders and their neighbouring solar farm owners, operators. They can cover a whole range of issues and remedies extending well beyond insurance, but I want to focus on the insurance aspect today. I recommend if people are interested in understanding more about neighbouring agreements, the Australian Energy Infrastructure Commissioner's website has a whole lot of information on them, and they promote them as best practice for rural and regional Australia. The Commissioner is aware of these issues and spoken about, or his office has spoken about them. The position of Commissioner is currently vacant. And the Commissioner exists to receive and refer complaints from concerned community residents about solar farms, wind farms, batteries, and transmission lines. So they're a good place to start. Now, each neighbouring agreement will be unique and reflect the specific circumstances of an energy project and their respective neighbours. So I want to talk in general terms about a couple of approaches you can take with a neighbouring agreement to address these insurance concerns. Before I do, I want to point out that insurance solutions should also be accompanied by risk mitigation on the part of the solar farm owner and operator. So things such as fire breaks and well-maintained vegetation on solar farms help reduce the risk for the solar farm, but also for neighbours, and that's their own fire risk, but also their liability risk as well. So the first approach, going back to the neighbouring agreements, and this is the one that the Australian Energy Infrastructure Commissioner's website has sort of promoted, is that energy infrastructure operators could reimburse their neighbours for increased public liability insurance premiums those neighbours might incur for their existence. The second approach, which I know has been tried and it's been used not with renewable energy, but has been used with other sort of energy infrastructure, is that landholders are noted on their neighbours, that's the large solar farms insurance policy. So generally speaking, what noting would mean is that in these instances, the owner of the solar farm would indemnify their neighbour against damage caused by an accidental fire started on that landholder's property that causes damage to the solar farm. So there's sort of two options that a neighbouring agreement could take. Either of them can help resolve these specific fire insurance related concerns, and I'm sure there's some more options that can be deployed, but I don't want to get stuck into a laundry list of those today. What's best for a given landholder will depend on their specific circumstances, insurance, as well as those of the neighbouring solar farm. Farmers' trusted advisors, insurance brokers and lawyers will be an integral part of that conversation. They will be able to help. So what's really critical is that landholders do not carry the financial risk of neighbouring solar farms. These solar farms, nor anyone else, should be asking or expecting for this outcome. Solutions need to be engineered to ensure that farming can continue alongside these newer neighbours. So finally, before I hand over the call to Josie, I just want to reiterate that the insurance industry remains committed to providing farm insurance products, and I have a lot of conversations with members around that, and everyone's committed. Our position is that a just energy transition must respect and coexist with bush communities and existing regional businesses and farms. From an insurance and particularly a public liability perspective, this respect means ensuring that new financial risks are not being unfairly pushed onto neighbouring farmers. How's that, Josie? It's all yours.
Thank you, Eamon. Now, we'll wait for questions till the end, so anybody that's got questions can put them in the Q&A now. But we will now listen to Josie Zilm from the National Australia Bank. Now, Josie is the NAB's Agribusiness Executive. NAB provides financial backing to Australian agribusinesses to grow food and fibre for our domestic market and the world. Josie oversees NAB's agribusiness portfolio, looking at markets, weather, climate and other trends influencing the agricultural sector today and in the future. Josie is also a beef and fodder producer from Gippsland, giving her a unique perspective to her work, combining practical agricultural knowledge with a keen awareness of profitability, markets and environmental dynamics. Over to you, Josie.
Thanks very much, Pete, and thanks, Eamon. That was very interesting. Thanks very much for the opportunity to join you all today, and there's been some incredible questions come through, really thought-provoking, so thanks for sending those through in advance. And so today I just wanted to have a chat about the banks, the NAB's perspective, and that more broadly of the financial services industry, our interest in climate. And so where I'm just going to start with is a little slide on why we're interested. People often ask me why are banks asking us about climate and adaptation and resilience. And here it is. We can see from 1970 right through to 2023, the number of extreme weather events that we've been experiencing each year. And so when I look at this, when I see the increase in drought and flood events, extreme weather conditions, wildfire, I think farming and probably also banking actually was pretty simple back in 1970. Since then, we continue to see an increase year on year of these events, which really are impacting the incomes on farms and the way that farmers are going about, about undertaking their operations. And so for NAB, we've got some serious skin in the game. We've got about 30% market share of the agri sector. And so the agricultural sector, the health of it, the resilience of it, the profitability of our customers, we're really highly dependent on a strong sector. And so the work that we've done and that we're continuing to do is having a look at, as a big business bank as well as an agribusiness bank, having a look at the impacts that nature and climate has on the different sectors that we bank. And so we are looking at the transport sector and commercial real estate and a whole lot of sectors, including agriculture. And it won't be a surprise to many of you that when we look at agriculture and we're assessing, climate risk and nature, that agriculture is highly dependent on nature, but it can also have a high impact on nature as well. And so when we say high impact, it can have, as farmers, we can greatly influence the health of the soils, the health of the biodiversity around us, but also, we can degrade the soils as well if we're not careful. And from a dependency point of view, we're having increasing hail, so the impact on the horticultural industry, droughts, water availability for crops and livestock. So as an agribusiness bank, seeing these increase in climate events each year is quite concerning for us. And we need to make sure that we turn our mind to what it means for our farmers and how we can help them build resilience in their business. So at the end of the day, a strong farming business means that we've got a strong bank as well. So the way that we look at these key drivers, if I can move my slide on. Okay, so the 3 C's of credit. And if there's any ex-bankers on this call, the 3 C's of credit are a common way that a banker will look at an opportunity. And those 3 C's of credit are described as character, collateral, and capacity. So character is all about the humans within the business. It's about the people, it's about the way that they are looking forward, the way that they're thinking about the resilience that their business has to whether it's market dynamics or climate. So they're thinking forward, they're looking at different tools that they can use within their business and thinking about the future state and sustainability. Might also be about the experience of the borrower as well. So, character is about the people within the business and us understanding, the caliber of their business planning and their forward view. The collateral is all about the land that we're farming on. So it's about looking at where it's located, the sorts of assets that might be on there, the type of industries that are on that land that's being farmed. And last of all, capacity is the capacity to repay the debt that we lend. So it's about having a look at the timing of the cash flows, where the cash flows are derived from. So is it from primary production, or are there other maybe services to ag or other industries servicing that debt? What's the timing of it, and will it be able to repay the debt that we lend? So we're quite interested in, we have to be making sure that the money we lend out can be repaid. And so in the context of climate risk, and banks are in the business of risk the same way farmers are, but what I'm observing is that our conversations are changing. So we've always been, quite interested in drought, and we'll ask about markets, and we'll ask about, we do ask about risk. But when it comes to what we're starting to understand about climate and the sorts of tools that are out there to even give us a forward-looking view about climate, we're going to be asking more or different questions, and farmers are going to be coming to us with more information and ideas about climate and risk and opportunities. And noting that it's not all about risk, because a changing climate does bring opportunities as well, with the where commodities are grown, opportunistic rainfall and things like that. So having a look at the character piece specifically, we're having more robust conversations about the sorts of physical risks that farms are experiencing. So whether it's drought, are people forward thinking about making sure that they've got fodder on hand for that next drought event? How are we making sure that we're ready for fire? Are we close to national parks and flood events as well? We've got people that are turning their mind to input efficiency. So they're thinking about, well, can I save money on my inputs, fertilizer inputs, water? Can I make my water go further? Thinking about planning for drying climates, as I mentioned, and also using the technologies that are out there, such as, projections, CSIRO, and the projections that are out there to plan. The Bureau, it's a bit topical, but the Bureau does give us some forward planning abilities. And also there's spatial tools out there, such as measurements of soil carbon or farm management tools that people are starting to use. And all of these are rolling up into our farmers, thinking about their readiness for these changing conditions, but it might also be supply chain readiness. For example, if the supply chain's starting to ask questions, our farmers are ready to be answering those. And all in all, these things, they're great altogether and they're all important, but at the end of the day, is a farming business profitable? So we can spend as much money as we like on satellite capability and monitors and doing all these wonderful things, but do we have a profitable, viable farming business at the end of the day is paramount. So on the collateral, some of the things that we're starting to see with farmers, they're talking to us about biodiversity protection and enhancement. So fencing off riparian vegetation, tree planting. They're thinking about, the soil quality, investing in different techniques to improve soil carbon, and thinking about the sorts of applications of fertiliser. There's land use impact that people are turning their mind to, which we've seen as well. So we're seeing grapes move further south into Tasmania, almonds move further south. We're seeing some areas that are becoming more marginal. People are thinking about adjusting their stocking rates in these areas, potentially irrigation expansion or, using irrigation where we can. And also in some areas being moved into projects for tree carbon, so plantations. So we are seeing a change in industries across the portfolio as well. Looking at and asking about water availability. So stock water in a dry climate's really an important thing to think about. And we're seeing customers identify this and invest in troughs and expanding that sort of water infrastructure around their farms. And lastly, on capacity, income reliability. So when we experience a drought, we've seen liquidation of livestock herds where we've experienced drought in areas, that can create cash flow at that time when livestock are being liquidated, but it can create a pinch point later on when people are trying to, to restock their farms as well. So, understanding what the consequences could be if people need to destock. People are considering income diversification. So, it's not just now about the grazing property, but some people are coming to us saying, hey, I've got these projects and I'm starting to generate income from ACCUs, for example. So in time, there's going to be different influences such as the carbon price potentially. So for people that are getting income from selling their ACCUs, the carbon price may influence that income. We're having changes in consumer preferences. So there's opportunities for people to participate in sustainability programs, which might mean that they can command a premium for their product because those consumers are seeking the reduced carbon or sustainably produced product. So changes in consumer preferences and shareholder and investor expectations. So we're starting to see as well, going to start at the top end of town, but expectations with reporting around financials and disclosing the impact of climate risk on the financial performance of businesses. And then there's activism as well. And, rightly so, we need to be prepared so we can show our wares. So being prepared to say we're doing the right thing by way of animal health and welfare. And, we're prepared to share our credentials with, our fertilizer application and that we are doing the right thing. So there's a little snapshot of some of the dynamics that we're starting to see come through from a climate and ESG risk in the banking sector. So that's all from me.
Well, thank you, Josie. Now, it's been great to have a breakdown of all these issues for everybody listening in, and we will go now to some Q&A and try and answer some of these questions in more depth. So I'll just get to Q&A. First question here might be for Josie, but will insurers be requiring carbon emission data from farmers in the near future? And if so, is there a timeline?
So at this point in time, no. So I would say that we are curious, but we're not asking people for data. So I can tell you myself, I've got a beef farm, and the collection of data on farm is a nightmare. So when I collect all of trying to reconcile my livestock and also, the fertilizer at the end of the year to even try and build an emissions profile is very difficult. And the banking sector, we're interested, and we are hoping to get to the point where we can understand the emissions profile of our agribusiness portfolio, but it's incredibly difficult. So, until we can understand, how we can do that, whether it's top-down data or whether it's understanding it from customers, we do recognise how difficult it is. And, at this point in time, no, we won't be asking. And I think as well, there is a lot of information out there which might actually help inform us as to the emissions, the financed emissions, you call it, from the banking sector. And, we're an agribusiness bank, so our financed emissions from agriculture are going to be quite significant compared to another bank who doesn't have that exposure to agriculture, but maybe they've got a greater exposure to coal-fired power generation. So I think all banks are going to be interested in financed emissions across all sectors. But for the farming sector here and now today, we're curious, but we're not asking anyone for that information.
Thank you. Now we've got a question here which I'll give to Eamon. What role can state and federal governments play in ensuring that farmers have access to a range of affordable and fit-for-purpose finance and insurance products? Do you have a view on that?
Yeah, thanks, Peter. I think government has a critical role. We, as an industry, are constantly talking to government and constantly partnering with government across a range of initiatives. So, it's a bit hard to speak directly to agribusiness. At the moment, the government's really focused on home insurance, making sure people have access to affordable home insurance. And so we're doing a lot of data sharing with the government to give them an understanding of the aggregate national risk around that. And I think when it comes to farm insurance, that's something we'd be very happy to do again, to be having those conversations and giving them the right tools to do that. Ultimately, it's unfortunately a decision for government how they intervene or help in the market. But yeah, I think there is a big role for government to play.
All right. Another one for Josie. What are the different forms of finance out there for farmers, and what's the importance of the term emissions efficiency for livestock?
So we offer regular banking products like all the banks do. And I'm not only speaking for myself when I say that other banks as well are NAB looking at and already offering green lending. So green lending, the idea behind it is that there might be a discount on the loan, might be modest, but there is a discount on the loan. In turn, though, the lending needs to be aligned to, well, for NAB, I'll talk to NAB, we align the criteria to climate bonds standard. So, for example, you might have a farmer who wants to do some drought mitigation activities. So they might want to put in a containment yard to feed livestock, or shade for trees, shade, or tree project, increase the troughs and water points. So things like that, which there's mitigation. We can fund activities under mitigation. We can fund if there's farms that are reducing emissions. So looking to do something different where they can actually, they've done a baseline and they're going to evidence an emissions reduction, that we can fund a farm who's committing to that. Or a whole farm that's best practice, such as zero till and has waterways fenced and things like that. So we would need to check a specific example against the criteria to see if it would align, but we do fund those activities. The point of making sure that we have a standard to align to is so we don't greenwash. So we often have people come to us and say, oh, I'm doing this, can I get a green loan? Well, it's not that simple. We do ask a lot of questions, and we do ask for evidence as well, because if we're offering these products out in market, we need to hand on heart say it was eligible against the standard, and this project that was funded achieved the outcomes that were intended. Regarding, there was a question regarding emissions intensity in livestock. Can you read that question out again, Pete?
I did go down from that, but anyway,
sorry.
No, it'll be here somewhere.
So I think we do fund emission reduction activities, and if there's something specific for livestock that that we can fund to reduce the emissions. Look, maybe Asparagopsis is commercially available and has a really great commercial application, and there's a project that means that could work on the farm. We absolutely will provide funding for emissions reduction. Yeah.
Now I've got a question for Eamon, possibly, and I'll roll two questions into one because they're both similar. First part of it is Australia's current climate variability is often quoted as being 22% greater than other countries. With low and decreased uptake, will multi-peril insurance be a worthwhile investment, cost return, for both farmers and insurance companies? Are there alternative risk solutions we should explore? And also, if I can just get this over here a bit. Where is that one? Yep. Matthew Pryor is asking, how is the insurance industry viewing innovations like index and parametric insurance to expand the set of climate adaptation and resilience solutions to farmers? So they're sort of both about different forms of insurance.
Thanks, Peter. I might get you to repeat the first one, but I'll answer Matthew's question first because I can see it here in front of me. So on innovative things like index and parametric insurance, I know that some of our members offer different products. So I can think of one member that offers parametric insurance. So they view innovative products very positively. These products are probably a lot more in use in the United States and potentially in Europe. And so members have a big interest in picking up innovations from around the world and applying them in Australia where they're appropriate. So the industry is very open to innovation of products. And could you just repeat the first question?
Well, the first question was kind of on those innovations and multi-peril crop insurance and the decreasing uptake of that, and whether it will ever be worthwhile for both to make a return for both farmers and insurance companies.
Well, I mean, I don't want to stray into the advising, as I mentioned, so I can't tell you farmers if it's a worthwhile investment for them, but is it a worthwhile investment for members, for insurers? I would say if they're offering the product, they see value in the product for themselves and their customers.
Right. Yeah, that sounds a very good answer. Right now, here's one for Josie. What concerns does the finance industry have for farmers in carbon projects? I guess that relates to what you were saying there a minute ago.
Yeah, so carbon projects, we're starting to see more and more of them, which is really, it's interesting. It's exciting for people to have the opportunity to monetize as well some of these, changes in farming practices. And so we're probably taking a learning approach. What the process is if a customer has a banking relationship and they want to do a soil carbon project on their farm, and their bank has a mortgage over it, they will go through the paperwork, and one of those pieces of paper will be that you need to get consent from your bank because there's a mortgage over the land. So the banking sector, well, broadly speaking, has sort of come around full circle. We didn't really know what this might mean for us. And in a pure sense, some of the questions are, what risks are associated with this for our customer? So could there be an impact on the valuation of the property? What happens if it gets sold? Does that impact the value? Does someone see value in it because it's generated ACCUs? Or does someone say, oh, that's a problem, it hasn't generated ACCUs, but there's a project on there? What does that mean for me? Am I confident that it's priced right? So there's a whole lot of questions. We're generally supportive of them. So we're generally we do. I won't say we'll do it every time, but we're generally comfortable to provide consent. But we will do that if we are confident that the customer sought their own legal advice and has a good knowledge of it, because we're not here to provide advice on those. And there will be some circumstances where look, we may not be comfortable for a range of reasons, but I would say all in all, I think it's a really positive opportunity, and one that we're quite interested in supporting customers with.
Rightio. Now, one for both of you. You might have a comment. How is insurance and the measurement of risk being evaluated when it comes to investing in farm infrastructure, carbon and biodiversity markets? We might go with Eamon first.
Sorry, Pete, can you just repeat that for me?
How is insurance and the measurement of risk being evaluated when it comes to investing in farm infrastructure, carbon and biodiversity markets? So
that is a good and very big question. I mean,
it is.
That's why I threw it open to both of you.
Yeah, look, I know that, so in the climate change roadmap that I mentioned before, one of the sort of 4 pillars that the industry is building the roadmap on is net zero investment. So I know they're looking more and more at investment now. How each insurer approaches investment portfolios, that's probably a little bit tricky for me to answer, which is not a great answer, I acknowledge. And what was the question about the risk? The risk.
Yeah, are you assessing risk, or how is it assessed? It might be more of a banking question, I guess, that part of it. If people are going to invest in biodiversity and carbon markets or put the money into setting up those projects, I guess.
Yeah, so sometimes, and there's 2 ways we're seeing these sorts of projects come about. It might be a farmer who is looking at a project on their farm, and it's kind of secondary to their primary production. So, they will have primary production income that's servicing their debt, and quite often the soil carbon, because the yields may not be known until you test in 3 or 5 years, that is sort of a bonus income, I suppose. So that's that there's not a lot of risk from a repayment of debt position there, because they've got the primary production income. If we fund a project that is a tree plantation, for example, and the debt is being repaid via generation of ACCUs and the sale of ACCUs, that is where, that's a different risk profile. That's it's not primary production income servicing it, it's the ACCU income. So we need to do, and there would be as well some pretty detailed work done to estimate the yield generation of those ACCUs from the project. And we would use that information to assess servicing, essentially, because that's servicing the debt on that project. So that's sort of 2 ways that people are doing projects. And then, if you've got a plantation project, one of the biggest risks to plantation projects is fire. So, and you know, heard from a lot of people that there's a range of ways that that the projects will work if fire goes through. So there's some allowances for, you know, for the trees to be burned down. I won't go into those because I'm not an expert on them. But practically speaking, we'd want as a bank to be really have a good knowledge of what is the mitigation risk. So are there breaks in the trees? Have they got fire fighting gear set up? What is there, like how quickly can someone get there? So, you know, there's absolutely, if you think of, you know, any business, what are the key risks to that business? And, you know, not every business will have climate as a key risk, because a business might have irrigation, for example, and they may have mitigated the dry risk, for example. So depends, you know, how high the risk is on the sort of scale of all the risks to that business. But for a tree project, you know, fire would be way up there. So we'd be really interested in how are they mitigating against that risk. So yeah, so long answer. I'm not sure if I've answered the question. Is that close?
No, it's complicated, but that'll be enough. I have another one slightly for you. Do banks see farmers' sales of ACUs from sequestration projects as income or as a property rights sale? Because obviously they go for a long time and they have.
Yeah. Yeah, so we can recognise ACUs as income. So definitely, to the extent that we would need to rely on them, though, for servicing depends on, it's a case by case. So like I mentioned, the tree project, for example, where repayment is actually from ACU generation, we would be more interested in scrutinising the ACU generation and the project and its risks. Probably more so than a farming business where their primary income source is farming or primary production. So it really depends on, you know, how much we're lending for a project and, yeah, how that debt is proposed to be serviced by the customer.
Rightio. I did have a good question there, but it kind of just disappeared on me. There's a sort of a general question here, I guess. Maybe Eamon might have a view on it from his members. It's a little bit sensitive, I guess. How do you expect farm insurance to work as climate change and extreme weather events make it effectively unaffordable? Has there been any thought into how farmers can adapt to that?
Yeah, I mean, yeah, farmers, insurers are constantly thinking about the affordability of their product. I mean, and again, don't want to get into advice territory, but when you're thinking about trying to reduce premiums, and your insurance broker will be able to have these conversations with you, but thinking about mitigation and making sure you really document mitigation measures that you're undertaking, and not only you documenting, but they've got a level of explainability to your insurance broker and your insurer eventually, so that they can see how you are mitigating particular risks on your property, will help mitigate those, will help with the sort of some of the pricing pressures. But there is a more general insurance affordability problem at the moment. That's because we're in what's called a hard insurance market, where things like reinsurance are particularly expensive. Access to capital for insurers is difficult. Insurance is a cyclical industry and market, so there's just unfortunately patches where there are affordability pressures, and people will be seeing that in their home and contents insurance as well at the moment. It's just a tough insurance market at the moment.
All right. This sort of follows on from that. How important will eco certifications become, and where should farmers look for them? If that might be, we can leave the last part off, but will they become important? And I'll open that up to Josie and Eamon, because they've probably got a view on that.
Yeah, I do. I think that where we're heading is that people who can access a certification within the market that they're operating will give them preferential market access. And so some kind of contemporary examples of that are like last year when the livestock market was in turmoil and people were liquidating their livestock and couldn't get kill space. It was people who were participating in programs with, Coles, carbon neutral beef, or, had contracts to supply and had shown these sustainability credentials, Greenhams as well, that they were able to access that market and other people couldn't. So we see it with the cane industry, so they can command a premium under their Smart Cane program through the selling of sugar into Coca-Cola, I think. And there's also opportunities with cotton as well and market access into Europe. So some of these sustainability programs are going to become, better. They're going to become, they're going to become your ticket to play, I think, for a lot of industries. And it may not necessarily be a price premium that people are commanding through participating in the program, but it may just be market access. So it might mean that if you're not participating in a program, you don't have that surety to be able to access the supply chain. I think that's where we're at.
Do you want to add something to that, Eamon, about whether being in a scheme like that would help with your insurance issues?
I don't want to add anything to that because I've not come across that in the insurance space, so I don't have anything.
Okay, no, that's fair enough.
Fulsome answer there.
Question here for Josie. How is horticulture to keep up with competition in carbon farming when the rewards system isn't designed around long-term crops like fruit? I'm not quite sure.
Yeah, so I'm happy to answer that. I think it's interesting, and I've had this question before. The horticultural industry feels like they're at a bit of a disadvantage. Actually, I compare the horticultural industry to other industries, and I'll say the livestock industry. Horticulture is already really low emissions. So there's a few opportunities with, combustion engines on farm with forklifts, moving to electrification, solar panels, refrigeration. So there's a few things within the hort industry that can change to make some small increments with emissions within the business. But on face value, I think actually the horticultural industry has a head start anyway. If you're looking at soil carbon specifically, there's some innovations coming with being able to incorporate and improve soil carbon between the rows of row crops. So I was out on a farm yesterday and we were talking about some opportunities like that. I think at the moment with emissions, for example, the calculators that are out there don't take into account soil carbon anyway. So, is the horticultural industry at a disadvantage? Probably not yet. But yeah, certainly if you wanted to look to improving soil carbon and generate ACCUs, I think that, maybe in time there'll be an opportunity to do that on a small scale. And there's certainly organisations out there that are working in the horticulture space by way of looking at spatial technology to look at soil carbon within the hort industry. So yeah, I don't think it's all bad news.
Okay. And I think we're sort of getting to the end of the questions, but I've got one here for Eamon. It's about carbon. They're interested in what factors relating to insurance we should be aware of when developing a carbon project, and can you insure to cover if you don't build or lose carbon over 25 years? What will be the insurance trend in the future? And does the insurance industry see it as a risk?
What was the first question there?
Well, the first bit is about whether you can insure to cover the failure to store the carbon, I guess, in a carbon project. So over 25 years, if you don't build or lose the carbon.
Yeah, look, the short answer is I'm not sure. That's not an issue that members have been coming to me with around carbon storage. I think largely at the moment, farm insurance is still focused on the sort of the farming business, like the primary production stuff. I'm not, and insurers may be individually thinking about that. That's not an issue that they've brought to the ICA's attention.
Okay.
It is an interesting point, though. It's one of those unknowns about, you know, our ability to be able to maintain the carbon within the soil. And I think only time and research will tell. I think that we're just in our infancy in understanding the potential. So it's a good question.
Okay. And I think probably here's one. I can just get the understanding of it. You will be considering will you be considering other carbon methodologies as relevant in insurance and reviewing them alongside ACCUs? So I guess they're talking about the other countries' carbon units or whatever else might be out there in the market.
The short answer again is I'm not sure. That'll be a decision for each individual. I'm sure. I imagine how they do that. That's sort of outside the ICA's remit.
But, what else have we got here? I've got one here about the awareness of international. There is an awareness of international pyrogenic carbon sink sequestration options, which is talking about biochar. I guess there is an awareness. I'm not sure either of you are having a view on that, but anyway, we'll leave that if you haven't got a view.
Yeah, well, I think that there's certainly projects out there, but I haven't come across a lot of them, to be honest. So yeah, that would be an interesting thing to look into. Thanks for the question.
Okay. Are there any other opportunities being created by climate change? You sort of mentioned in your talk, Josie, that there might be.
Yep. So to summarise the opportunities that I see, and we need to remember that there's opportunities, because it's not all about risk. And if it, you know, bad things happening, because if it was, we wouldn't be farming. So, so the sorts of opportunities that we're seeing is, you know, proliferation of industries in, you know, places that we didn't used to have them. So there's, you know, that the moving of some industries. And that was like grapes and almonds and, you know, like even dairy's been on a bit of a migration as well through a drying climate as well. So then all of a sudden, like we saw through Victoria, through the drought, 2016 to circa 16, 17 to 20, I saw a lot of Northern Victorians move into around Warrnambool actually, and South Gippsland, where there was more reliable rainfall. So a lot of sheep country actually, you know, and farms were taken up and consolidated. So there's opportunities there. I think that there's opportunities with water use efficiency. So people that are improving their resources and making those resources go further. So we're becoming more innovative with our resources. Marginal parts of Australia moving in, you know, well, adjusting for stocking rate, but also potentially moving into, you know, there's big human-induced regeneration projects where people are letting land grow back into the vegetation that used to be there. There's tree projects as well. And there's a whole lot of biodiversity and, you know, natural capital outcomes from some of these activities as well, which have co-benefits to agriculture. And actually Farming for the Future has some really great research that they've done, which looks at the benefits of natural capital on farm and, you know, measuring natural capital and a positive association with superior financial performance of the business. So I think when people turn their mind to some of these things on farm that, you know, fencing the waterway and planting the trees and taking care of the soils, changing those practices, that there's actually some great profitability outcomes that can be achieved, whether it's being smarter with resources or having those mitigation opportunities within their business too.
Well, thank you. And now I think we'll call a halt there because I haven't got any more questions in front of me at the moment. But that was a good point to end on. Thank you to all those who attended today, and especially thank you to our speakers for such an interesting chat. This is an important issue, and I guess it will continue to be so. So keep thinking about it. Please look forward to a follow-up email with the recording, and please fill in the webinar survey with your feedback questions that we may not have dealt with, and we'll try and deal with them in the interim. And also, I'd just like to point out that Farmers for Climate Action website has a section on climate smart farming, which what Josie was just talking about is covered, some of the information from Farming for the Future. So if you're interested in that sort of thing, go to our website and look under the section called Get Informed and look for the Carbon Smart Toolkit. And before I finish, if you enjoyed today's interview, please consider making a small donation to continue delivering our webinars. This can be done via the donation page on the website or by scanning the QR code in the email you receive. And thanks again. I hope everyone has a happy day and is enjoying it to the end. Bye.
Thanks all.
Thanks, Eamon. Thanks, Josie. Thank you.